What's going on, guys? It's Mike here at the Modern Canadian. Today I wanted to talk to you about, well, tomorrow, essentially, but when you'll see this video, it'll be today. The FOMC meetings. Tomorrow or today is going to be the FOMC meeting, which should be, or what's, tentatively going to be the first US rate cut since before COVID. So we're looking at like what the market's going to do, and let's talk about it. I think this rate cut might be already priced in. I could be wrong. Who knows? Usually the market is forward looking. So like as we see here on Poly Market, we can see that there's a 54% chance that we got a 50% or more basis points decrease. I believe it was Elizabeth Warren that came out and said they need like 0.75. I know here in Canada we've already cut 0.75 already, so I don't see the US and the Canadian markets to be too far apart. So it makes sense to me that a half a point, or however you like to call it, 50 basis points or 0.5, half a percent, whatever the cut is going to be, I believe it's going to be half a percent or 50 basis points. Because I think we're going to get closer to where Canada is right now. I'm pretty sure Canada knows that the US is the last domino to fall. The EU has already cut rates. Other countries have cut rates already. So this is definitely where I think the US is kind of going to change the mindset, change the regime over to cutting rates instead of raising rates. This will be the guarantee. We know that we're in a cutting regime, and the markets will respond. This price or this point or cut will have already maybe be priced in. If it is priced in, this is still a change, a pivot per se, and we know now that upcoming there will be more cuts. So let's take a look at one thing I talked about in my previous videos was the DXY chart. The DXY chart is the dollar index chart. It's basically the strength of the US dollar against other currencies, the index. So we have what I'm seeing here, and now I am not a technical analysis person, but like this is pretty obvious to me. It looks like an M pattern, and usually I believe those break to the downside. But again, if we have rates starting to cut, that means weaker dollar because you're going to inflate the currency. So weaker dollar means risk on assets go higher, or assets in general go higher. Housing, Bitcoin, stocks, doesn't matter. Anything that's an asset, because it's no longer better to be in cash. And this is the most important thing I want to get across when we're investing. We have to understand, because we have an inflationary currency, we are going to have these boom and bust cycles. It's just the way the fiat system works. And that's okay. Well, it's not okay, but we got to learn how to play the game within. So we have to understand when to be in cash and when not to be in cash. And right now we're getting to a point when we start having interest rate cuts that we don't want to be in cash anymore, because it's more lucrative to be in assets than cash at this point. When rates are going up and the dollar is strengthening, so as you can see right here, like in this part, so basically in 2021, all they were raising rates, right? So this is when you want to be in cash because the dollar is strengthening against assets. So these are the ebb and flows of the market that we have to learn how to navigate and understand. Where are we in the market? What is the government doing? There's a lot of factors and it gets super confusing. And this is why I like to break it down and make it as simple as humanly possible. Look at this chart, the DXY chart, see what the government is doing. Are they in a tightening regime, or are they QE or QT? Are they quantitative tightening or quantitative easing? So we just got to look at that. Now, let's take a look at Bitcoin, because Bitcoin is king. I am not a technical analysis person, but if this doesn't say cup and handle, I don't know what does. I'm sure if you've been in crypto, you know what cup and handle is. If you don't, this is a cup and handle. This looks like the bowl of the cup. This looks like the handle, and essentially the neckline is here. So if we take the neckline, it's got to break this. And forgive me for my lines, this might not be perfect, but this is the neckline of the cup and handle. And basically, from what I've been told, we measure from here. So if it does break to the upside, this is where we go, and that puts Bitcoin at, I believe, 110,000. I've been told the break of this cup and handle is 120,000. Again, forgive me, I'm pretty garbage at this. So again, a lot of more money than where we are now. If that's the case, we're gonna go up. Potentially, the target is 83% increase. Your RRSP and your TFSA, your 401k, and any traditional investment is not going to make 83%. No way. Maybe in a whole year potentially, but I'd be very surprised if that's the case. So we're at a point in time, like a pivot point, or like Raoul Paul likes to say, the banana zone is just around the corner. So there's also, again, zoom out. This is the most important thing in crypto, is we get so caught up in the day-to-day, because honestly, crypto can move up and down like crazy day-to-day. And it really, honestly, if you're a long-term investor, if you're here for the long game, if you want to build generational wealth, if you want to change your life, you have to take it slow and be invested in the right thing. Understand the market, like I said, the ebbs and flows in the market, and also understand the 4-year cycle of Bitcoin. The most important thing you can do for yourself, if you're new to Bitcoin, you have to understand the 4-year cycle. When you understand the 4-year cycle, you can really have a good understanding of timing, where you are, how this works, because you have a cut in supply of Bitcoin every 4 years. People say the cycle is always going to be broken, but that would mean that the reduction of supply of Bitcoin would have to be priced in all the time. And I really don't believe I don't believe you can really price that in, because we don't know how much the inflation is going to be of the dollar. But we know the supply reduction, but we don't know in relative to the US dollar how much Bitcoin is going to be worth against the US dollar at that point in time. So I don't know if you can fully price that in. So anywho, let's take a look here. So we have, and I believe this happened last time. Let me look at the timing here, because I believe this was, again, last summer. We went all the way down, all the way until basically, I think it was November. November is when we started going up. So the summer we kind of went down, June, July, and then before August we started climbing up again. Here was a little different. We've been basically going down for 7 months. Since March, we had a new all-time high a lot sooner than usual, and we've been going down since then. This can only go down for a certain amount of time. This is what's called, in I know Ben likes to talk about this into the cryptoverse, the summer lull. So this is the summer lull. It's happening again. We are going to go up. This is about time. We've already hit the bottom. Bottom is guaranteed in. So guys, allocate properly. Take it slow. Understand the market. And gain more knowledge. And make sure you allocate. Because we're going to get to the point where we have all the FOMO. And when we have all the FOMO, you don't get in when the price is going up. You want to get in before, and you want to maybe buy on the way up, like dollar cost average on the way, buy into strength. But I would definitely be careful, because we're gonna go crazy soon. I don't know when. I assume Q4 of this year we're gonna start to go up, but I really believe into 2025 is when we're gonna see the new all-time high for Bitcoin and higher. We're gonna see probably the peak, most likely. I think maybe end of summer, fall of next year. But yeah, that's all I got. So FOMC meetings tomorrow. Let's see what happens, and we'll get it.